Hello everyone, welcome back to the 25th episode of the 2026 Portfolio Challenge series. It's been a while, but I've been on a small little vacation out in Utah, and now I'm back. And not too much has changed, but also a lot's happened, so let's just get right into it. And if you're first joining me, all these portfolios started at $100,000, and you can see most of them are doing pretty good. Disclaimer, this video is not financial advice. So in today's itinerary, we're just going to go over some of the portfolio changes, and this will mostly be at the end. So the meme stock portfolio is back to GameStop. I rebalanced the deep value portfolio after last earnings. It took me a while, but I finally got around to it. And then no real changes in the main or the choice value portfolios. And then things that happened over the past few weeks, and this isn't everything, but these are the big things that I remembered. And I do want to keep this under an hour. So yeah, so first I'll talk about the SPCX IPO. Actually, first I'll talk about Micron, then I'll talk about the SPCX IPO. And then I want to talk about Walmart with their nuclear partnership that just happened a few days ago, maybe even yesterday. And then GME, GameStop's EBITDA increase. And I just want to talk a bit about GameStop and my opinion on that, especially with regards to the meme stock portfolio. And then I think I'll go over my overall holdings and just some thoughts, what I think about each stock and whether it's worth to get into now or it's just something that I'm currently holding. And then again, I'll go over the portfolios at the very end. So let's just get right into it. So here's Micron. This is from a few weeks ago. This is from previous episode when this was before earnings, by the way. So the previous price target was at 1,600. The price was at 1,000, and I'd already taken 2/3 of my profit at 900, and I just said I'd ride the rest. And here's the new price target given their forward guidance and their current estimate or their current revenues that they just posted. So everything just went up drastically. The current price target is now 2,500. This is 1 year out price target, by the way, not till the end of the year. The old price target again was 1,600. So this is technically pushing this out 3 months, so it's not that big of a deal. But it is a pretty significant increase, especially given they're pretty insane numbers. So their EPS value was 25.11 versus their 20.86 estimated by Wall Street. This should say estimated there. And the revenue was 41.46 billion. This is just the revenue. And they just now roughly became almost $1 trillion, but if you look back a few months ago, this revenue was happening when they were at a third or a fourth of the price, because this is backwards looking revenue. And that's versus the 36 billion roughly. And this is the best quarter by far, and that's saying something because there's still plenty of deals happening and there's no slowdown. So I just want to pull up some of the Micron stuff, not here. Okay, yeah, so Micron is a $1.3 trillion company now. But just take a look at this, and I'll go to quarterly like I always do. This is a 350% increase over last year, which already had a pretty huge jump from the previous year. And this is just AI build out. This is all AI data centers. This is NVIDIA paying them. This is everyone else paying them. They're just doing phenomenal right now. And with their forward guidance, it's just going to keep growing like that. Even if they just post 4 quarters of $40 billion, that's already insane. That's a price to earnings of over 10, under 10, which is really good. And again, their forward PE dropped to 7.98, which allows me to keep them in the deep value portfolio. And it's been carrying my deep value portfolio pretty heavily. Yeah, I don't want to get too far into this because I will go over it later, but Micron has 17K out of my 26K profit. So it's 17K right there of my 26K profit total for the deep value. So I'm just happy to keep on holding that. So let's keep going. So the Walmart nuclear deal. So I think personally Walmart is very overvalued as a retailer, and I'll just pull up Walmart really quickly. So Walmart, I don't think I even need to run the numbers. It's a 40 PE ratio with a 38 forward PE ratio. And they're growing revenues at 5 to 10% at best, which is great for the long term, but I just don't think that warrants the price. I think it's pretty expensive right now. And I'm honestly not sure how the forecasts are so high. But Walmart, that's just quick on Walmart. And so what they're attempting to see is if they can put a nuclear reactor. This specific one is from Constellation Energy. which, fun fact, is one of the biggest names in nuclear energy that isn't in the URA ETF. And I'll just write that in right here, just so it's cemented in here. CEG not in URA. And so they're just trying to see if they can power 167 megawatts of energy localized. And just to put that into perspective, my entire county, which is a pretty big county, it's in Michigan, but my entire county uses 411 megawatt hours roughly. So if Walmart can produce, what's that, a third roughly of that? More than a third. That's like, yeah, it's like 40%. If they can do that localized, just think about how many Walmarts there are in the US. And if they can get that deal running, they can be their own energy providers to the local areas. And of course, this is if everything goes well. And so I also wanted to look at CEG, Constellation Energy. And so I gave them a price target of 250. They are profitable, and they are one of the only nuclear big names that are profitable currently. So price target of 250, that I expect will increase significantly after this deal with Walmart, but I have to wait 30 days for their earnings. And their current price is 258. And let's just pull them up really quickly. Let's see what the forward PE says over here. Yeah, so it says PE and forward PE is roughly the same, but to be honest, I expect this to jump up. If it's really doing a big Walmart deal, then this market cap's going to skyrocket. I do think nuclear energy is the future, by the way. So personally, I am invested in the uranium ETF URA. It does not include Constellation to my knowledge, but it includes a bunch of other names. And I do believe in the future of uranium. Okay, let's keep going. The trade desk. So this one popped into my scanner for the deep value. Price target of 28 for me. Current price is 18.63, I believe. And again, I'll pull that up. And why did it pop in? Because its forward PE is pretty low and its current PE is pretty high. I see analysts have price targets lower than mine, and I know Morningstar has it at like 21 bucks. So there is disagreement there, but they've been showing solid growth. I am not going to invest in them in my main portfolio or in my own private portfolios currently because, to be honest, I just don't really understand the business yet all the way. And I prefer to understand the businesses before I invest. But again, it is in the deep value. I did buy it at 18.1, I believe. Actually, I can just check that. TTD 18.02. So that's when I entered it. And it does look good to me, but again, I just need to research it more before I can fully invest into it. But it does look good. And again, I believe their earnings are also in like a month or so. Let me just check that out. TTD, I'm following. Yeah, 37 days. So 38 days from now. Okay. And then SPCX IPO. I was actually pretty upset that I missed this one because I was on vacation. Like I got the notification that it was happening and then I wanted to go and make a video, but it didn't happen that way. So SPCX, my opinions. It's not profitable. That's the biggest thing for me. I like to invest in mostly profitable companies. Rivian is an exception. GameStop up till recently was an exception. But Tesla early on was also an exception. But I'm not sure. I mean, this isn't Tesla to me. What is SpaceX? SpaceX is Starlink plus XAI currently, with maybe Starship coming up. And it's an Elon Musk company, so there is an Elon Musk premium. And it does have the NASDAQ inclusion coming in soon, which is, I believe it's 400 billion yearly money coming in passively, which is huge for them. And it will also give exit liquidity to it's like 4,000 new millionaires that are newly minted millionaires that want to exit, but they can't currently. So some stuff about it. Let me just open that really quick, by the way. So it's ready to go, SPCX. So some of the things I read about it. Starlink, it is likely to hit 16 million subscribers this year, maybe even more. And that, by the way, does depend on if Amazon Leo comes out or not. But Starlink, 16 million subscribers with just their basic plan of $55 a month is roughly 10 billion revenue in itself per year. And that's over half the revenue right now. And then we need to look further. So XAI is it's Cursor, it's Grok. I believe that's most of it. And if Cursor can monetize and Grok can make some gains, By gains, I mean if it can convince one of the big phone companies or social media companies to use Grok, other than Twitter, by the way, if it can use them to start making money, then I can see some of maybe the value of SpaceX being worth this much. But again, you can't just look at the stock price of 150 or 160. You got to take a look at the current market cap of $2 trillion, which to me is absolutely insane. I mean, when you're looking at the biggest companies in the world, I don't see a company that does internet and AI currently only. I just don't see that being worth $2 trillion when up till a few years ago, there were no trillion-dollar companies. And then finally, there is Starship, which can turn profitable too if it can reduce launch costs by like 10x. I did not verify that. That is something I just read. And Starship is basically their launching platform for the government and other satellites, which is working, but it's very, very expensive to run. In fact, I think they had a recent launch. We can actually look that up. Okay, not that recently, but it is going to be able to carry, 100 metric tons to orbit, fully reusable. Yeah, so it does work. It's going to work. I do believe it'll work. I just don't see that being worth $2 trillion right now. Not when you got Rocket Lab, not when you have other companies going to start competing probably soon. And then with the biggest revenue generator, there's Amazon Leo, which is going to launch technically this year. We'll see if it happens. I just don't see the stock price staying at 150. I believe 4 weeks ago when I made the previous video, I said it was going to 165, 170 from an IPO of 135. It did reach 225, I think. It's down to I was just on it. It's down to 165 right now. I believe that when exit liquidity opens up and everybody who works there can exit, which is like 4,000 people who are millionaires, I think this stock's going to drop to 80, maybe 100. And we'll see long term, but currently I am not going to invest. And again, none of this is financial advice, so take that for what it's worth. Okay, Robinhood. Why did I exit Robinhood in the meme stock? And let me just double check this to make sure I did not exit in the main ones. Yeah, I did not exit in the main ones. So my price target is 95. The current price is, it's already up to 101, and it was 107 a few days ago from what I saw. And why did I exit the meme stock portfolio? Because the spread was too wide for me, and not just the weekly spreads. So I was selling poor man's covered calls against Robinhood, and I was losing money despite supposedly being, or I was supposed to be able, based on the midpoint, to be profitable every week while moving the value up. But with Alpaca, I can't take a spread. I can only take the bid. So the spread was too wide for me. And yeah, I wrote here I can't do midpoints on Alpaca. And even worse, it didn't let me exercise the option, which would have been better for me than taking the bid at the moment, because the bid was under the value of the stock when it was, I think I tried to sell it at 98 or 100. And my underlying was 75. And I believe I sold it at 30. So I was not going to say upset, but it was definitely annoying because that was 6K right there. And again, this is not real money, but it was annoying because it put back my meme stock portfolio quite a bit. And so a few weeks ago, I talked about the 2K pattern day trading rule being implemented. And so it was officially implemented. There is no pattern day trading rule effectively anymore. And then Trump accounts are also going to be released July 4th. And I just wrote here, make sure you're signed up. Make sure you get that. That is literally free money right now from the government. This is if you have kids, by the way. Okay, GameStop. This is going to be fun. This is not a meme right now. The price target for me is 28. This is based on fundamentals purely. I am not letting my own emotions get into this. I think that they are doing a phenomenal job. And if they can actually end up doing whatever they want with eBay, it's going to look even better. And they recently, I believe a few days ago, they released news about their forward expectations, increased EBITDA, earnings before income taxes, depreciation and assets. It increased to 600 million from 400 million, which is, that's a 50% increase. And that's for the upcoming year. So that's pretty insane. And I believe it's the first forward guidance that GameStop's given out since Ryan Cohen took over, which is also good news. And so I do expect it to start drifting up slowly higher, but I'm not super optimistic because it's been held pretty steady at that 20 to 25 range, basically ever since Roaring Kitty back in 2020. So I'm not super optimistic. And I did want to talk about, let me just see if I've got that pulled up. Yeah, so I wanted to talk about the strategy, which is basically what I was doing with Robinhood, except maybe this will be more stable because this is going to be with a stock that's being held artificially at 20s, low 20s. So less of a risk of getting run through. Okay, so this is a poor man's covered call. I am holding currently 138 January 2028 shares, which is a year and a half from now, roughly. You can see here 575 days. And the current stock option is roughly 650. These are not that accurate. This is just rough. For the simulations, I actually did do it pretty accurately. And then these are the low-end option prices that'll let me continue to grow the account. I need to get, on average, a minimum of 0.12 or $12 per 100 shares, which is, I can't do math right now, but I believe that's around 1,800. Yeah, it's right there. It's like 2K a month, 2K a week, sorry. And then that should be growing. So where do I expect this to go? In the worst case, if I only do $12, which is on the low end, by the way. For instance, this week I did miss out on it. Yeah, this week I did miss out, and I believe I still got it at, I still got it at 14. And I missed out on the weekend, which I like doing the weekends because that's just 3 free days of data decay. So I missed out on the weekend and I got 14. So I believe 12 is very possible. And based on the simulations, which takes into account a bunch of other stuff, this is the line to look at right here. They've all mostly got me at above 150K with not too much variance. I don't think I'm going to be able to reach this. Actually, it should be roughly here. That's still around 150K. I don't think 103K is also reasonable right now. That would mean only 271. How many weeks are there left until this date? 27 weeks. Yeah, 270 is actually not that far off, especially considering it. Yeah, okay. But will it be worth 380? No, it'll probably be worth 5. So yeah, if we can get to 135, and I'll just write that down here. Goal for memestock, 135K, which is, to be honest, that's roughly where my original goal was. I think my original goal was 7,000 shares of GameStop to grow, and that was supposed to be naturally growing. And then I left that, but 135K, that'll be almost 7,000 shares, more than likely, maybe like 6,500. So I am optimistic with this strategy. Okay, so some of my portfolios and how they've changed over the past 3 weeks. Again, I've been on vacation, so I did make a few changes, and I had to go back and try and catalog everything. I believe I did everything close to perfect, but maybe not. Thankfully, these are on Alpaca, so I will have history for everything, which I will display on the last week. I'll display everything properly. And so what happened here? I did not buy more ELF. ELF just ran up from, before the break, it was at 55, and now it's at 70. Meta, again, not much changed. Nothing really has changed in this one. Well, my cash did increase. What did I sell? Oh, I sold Southwest, LUV. I sold them at 51. They just reached my price target, so sold them. And then here are my profits and losses. Yeah, you see LUV, I exited at a profit of $3,000, which I'm very happy with that. And then ELF is finally profitable. It's been down for most of the year. And again, Micron and SanDisk have been carrying this. And most of these I'm already out of, other than Microsoft and Meta right now, I think, and Celsius. And I am very, very bullish on Meta, to be honest. I might talk about that next week. My deep value, again, I rebalanced this, and this is a pure forward PE play with some guardrails on it. And so I increased my cash position. I believe I sold 3 stocks, Comcast being one of them, which is funny because Comcast literally jumped 25% like yesterday. And I did add the trade desk, a 10K position, I believe, and it's up to 12K. And then here are my profits and losses for the deep value. And then my choice value, which is my value formula picks, and this is weighted by conviction and volatility, IV. And so again, Robinhood and Alpha are still big, and I think I will exit Robinhood at 110. We'll see. I do fully believe they'll reach 110, and Alpha, I do think they'll reach, in this cycle, probably 90, maybe even 100. And the choice value, of course, Micron and SanDisk, with Robinhood and Elf carrying everything. And Celsius is the big loser here. And I might actually dump more into Celsius. I'll need to think about that. And that's it for... Oh, I did want to talk about all of my holdings. So let's just go over to this one because this one contains most of them. Positions. And let's go market value. Okay, so Elf, it's at 70. I will probably exit at 90. Oh, wow, it's at 70. I just realized that. Is that pre-market? Yes. Okay, cool. Robinhood, 101.6. It's going to go up to 110 at least, maybe even 130. I'll probably exit at 110 just because I think there's better things out there, specifically Meta right now. Micron is 1141. I think that's going to be a long-term hold. I've already taken a ton of profit on this one. Then there's Meta at 563. That should be 850, maybe 900. Very bullish. Nvidia, I'm just going to keep holding Nvidia. I think it's a great company. Their forward PE is not bad at all. And neither are my projections for them. My projections have them at 230, I think. And the forward PE is still under 20. And more importantly, under the S&P 500 average forward PE. And again, I don't put too much into the current PE because that's all backward looking and I care about what's forward. TSM, didn't they just get hit with like a huge lawsuit? TSM. Did I imagine that? Okay, it looks like I imagined it. Okay, yeah, I am very bullish on TSMC. They are still, I believe, one of the sole chip manufacturers in the world. And even, I think it's the only non-American company I have, and I am making a big exception for them. Celsius, my price target's 45. Do I think it'll reach that? I'm not sure. I think the Celsius brand is slowing down, but I do think Alani Nu is growing rapidly, and we'll see what happens with Rockstar. I was not a fan of that acquisition. Then, like I said, I am holding uranium, the ETF. Again, this does not contain Constellation Energy, to my knowledge. And my price target here is, well, to be honest, I'm just going to keep holding it. I don't really care. It's not that big of a position. And then Microsoft is my last one at 370. I don't know what's happening with Microsoft. Yeah, I'm not sure. We'll see. I got to rerun that probably. Let me just check my other portfolios. Memestock, that's GameStop. I talked about that. Value, is there anything here? No, it's all the same, just the value ones. Deep value. So all of these are, I do not choose them. They are screened and then I put guardrails on it. But just my opinions. Fiserv, I don't see it. Personally, Pins, I don't see it. Pinterest, I don't see it. This is, I believe, yeah, Capital One Finance. Will it reach 300? No, I don't think so. Not this year. Lithium Motors. Why am I holding this? I didn't even know they were profitable. The Mosaic Company, I am not super familiar with them. Vista Energy is the only non-American company here, and that's only because I do believe they'll do well. And currently they're dropped mostly because oil dropped, but they're growing at a huge rate, so I expect this to run. The trade desk, like I've said previously today, my price target is 28. Gen Digital, this I think I will put a sell order at 30. Is that my exit? Yeah, that is my exit. Cool. And then Micron Technologies, until the PE reaches, well, if I hold it, I'll probably keep it till it goes to 20, the forward PE, and it's currently back down to 8. It was at 11, and I was debating at 11 if I should because it's not under 12, but I really like Micron, so yeah, it's still at 8 anyways, and it needs to grow by 1.5 anyways, just to 1500, just to reach the 12. So, and I believe that is it. So thank you guys for listening. Good luck this week. I'll see you guys next week. Bye-bye.